Hello, coconuts! Today in TFC Stock Geek Out, we're covering a popular request from the community. We do that. That's horrible. Hello, coconuts! Today in TFC Stock Geek Out, we're covering a popular request from the community. This company turns a bunch of data into something that can actually be used and has become the household name in the B2B space, with even government clients. And this company is Palantir. Joining me today is Eugene Ng from Vision Capital and Vision Capital Ventures. Eugene's career in finance spans over 11 years, with stints in both Citi and JP Morgan. For reference, this episode was recorded on 15th April 2022. Our discussion today is solely for education and entertainment purposes, and it does not serve as any form of advice or recommendations. Thank you for loving what we do, and please subscribe so we can get even bigger guests. Now, let's geek out. Hey coconuts, welcome back to another Stock Geek Out with me, Rakesh. And today we have Eugene Ng, right? So we're going to be talking about Palantir, a great company. I think a lot of our coconuts, a lot of our viewers have been sending us comments on doing a Stock Geek Out, so we thought we'd get the best person for it. Eugene here has created a massive thesis and a nice document for us to go through. He's done a lot of research here and quite extensive in this regard. So Eugene Ng is the founder and chief investment officer of Vision Capital and Vision Capital Ventures. He's also an author of the Amazon's best-selling book, Vision Investing: How We Beat Wall Street and You Can Too. Thanks for sending me that book, by the way, Eugene. That was awesome.
My pleasure, Rakesh.
Eugene's career in finance spans over 11 years, starting in Citi as a management associate. And then he moved to JP Morgan, where he was providing FX and interest rate sales and advisory for over 8 years, and he rose all the way up to VP, right? Vice president. On the fun side, Eugene is a massive sportsman, and he's looking quite fit right now. I think he went for a swim earlier today. I don't know. And he actually represented the Singapore national team in water polo. There you go. So it was for a swim. And they won gold. Was that 22nd gold? Was it, Eugene? Or?
Yes, it was. Back in 2007.
Awesome. Wow, the Southeast Asian Games. Nice, man. Good to have you here.
Good to have you here, Rakesh. Thank you for inviting me.
Yeah, all good. Okay, so today we're going to talk a bit about Palantir, understand a little bit more about what they've been doing, right? I know they've been sort of went public last year. I think it was September, a couple of years ago, sorry. Mm-hmm. And, the stock has been up and down a little bit. People have been pulling out a little bit. There was a little bit of issues with that. Love for you to shed some light on it. And more importantly, what's next for Palantir and where can we fit that in our portfolio, so on and so forth. Yeah?
Happy to do so.
Awesome. Okay, so before we start on Palantir, I think it's really, really important, Eugene, for you to explain what sort of investor you are, right? How do you look at stocks? Maybe take us through that.
Sure. No, thanks a lot, Rakesh. I think just want to run through a bit of how I look at investing. So the way I think about investing is really investing in businesses and not really trading around them and having very short-term horizons. So my investment horizons tend to be very long-term. I look at owning these businesses for basically years, if not decades. So it's really almost forever. Okay. Right?
So you would say more than 5 years?
More than 5 years, easily. Okay. Yeah. So I aim to hold them for as long as possible. I'm very fundamental only, bottom-up driven, and I do a long only strategy for public listed equities. I don't, without any leverage, without any hedging, without any derivatives, or without any short selling. The main reason for all of this is because I don't want anything that gives me unlimited downside. I like things that has unlimited upside and very limited downside. So I think I positioned it all the way from a strategy perspective to remove anything that that removes or gives me all this unlimited downside. The vision really is to be really focused on our mission. Really is to invest in companies that reflect our best vision for our future, changing and shaping the world for the better. So I really call it vision investing, which is also what I wrote in my book.
Yep.
Because I feel that in if you think about it in the long run, building a great company really takes time. And I think that's really why we really seek to invest for the long term, like I mentioned just now, in these businesses. So it's really for years and for decades, right? I look at a couple of things that I really look at. So I think the first one that I want to look at is really Businesses with very strong management, I want to have a very singular focus in just finding and owning the best businesses with strong management ability to really to innovate and execute through such
Okay.
very long periods of time, right? Most of them are typically founder-owned,
Mm-hmm.
founder-led. They tend to have very high insider ownership, and they also led with, or they can be also led by very strong, experienced professional managers. The
Got it.
fourth point is that they tend to be top dogs and disruptors, so they're often well established, well positioned, or well poised to
Yep.
disrupt a potential large market opportunity. That's
Okay.
really supported by structural long term tailwinds, not headwinds. So I'm really looking for, if you think about it, the monopolies or the
Right.
oligopolies. And within these monopolies and oligopolies, they're probably top one, two within their specific niches or sectors. Because monopolies and oligopolies tend to allow you to have pricing power, certain competitive advantages, and you're able to run all this through. As a result, the companies tend to be able to keep growing faster than the market, gain market share, and also have certain pricing power and able to provide more value, and as a result extract more value and make more profit from that. So I'm really looking at that, right?
Got
And
it.
also in this, if you think about it, in the entire stock universe of just over the 100 plus years, I'm looking really for this minority of this super tower companies, because almost 1% of the businesses generate close to majority of the returns. So I'm really fishing in a very, very small pond. And just trying to basically weed out and find characteristics that allow me to find these great businesses and basically own them. And in terms of the business itself, I'm really looking at a very strong moat and financials. I love businesses that have very strong competitive advantages. I like network effects. I like them to be extremely scalable, meaning if suddenly if the revenues or the business comes in and it's great and it can come in 2-3x, the business should be able to scale almost infinitely. I wanted to exhibit very strong operating leverage, which means improving profitability, which means as the revenue grows, what we have is basically your sales and marketing expense, the margins of that, the R&D margins, and also your general and admin G&A expenses margins. All this can basically glide down over time. So as a result, if you
Okay.
think about it, as the top line revenue grows, the profits grow even faster, and that's really what's even better. So I also like businesses who tend to have also very strong recurring and growing revenues that are growing very rapidly, and more importantly, very durably. Because when you're looking to own businesses, right, there's at least 3 to 5 years, 10 years. You need companies to be growing at high rates for a very, very long time.
And
I
what
think
do you
that's
mean by
really key.
high rates? Maybe
So
give me
high rates, high
some
rates
figures.
typically I look for most of my companies that I own, at least their revenue top line growth rates have to be at least 10 or 15% and above. My,
Okay.
my portfolio mean growth rates are around 30%
Okay.
on a revenue growth rate.
Got it. Got it.
Yeah. And more importantly, they need to have strong balance sheets. When I mean strong balance sheets, what it means is that they are typically net cash. They tend to have little or no debt. Debt is it's a two-sided thing, right? When you can use leverage, it can help to improve margins. But at the same time, when you have debt, and some things goes up, for example, now you have upcoming in an environment of how possibly higher or rising interest
Inflation.
rates,
Yeah.
that becomes a problem, because then you need to basically raise more debt at high interest rates, and if your profitability margins get affected and you have no room for that, that can significantly affect it. So what we're trying to do is
Got it.
really eliminate all kinds of characteristics, and trying to just have all of this in place, and just allow our companies to just keep growing and not have any major stumbling blocks, and allow them to stumble, basically. If you think about it, it really ties back to what I have in, which I mentioned, was really vision investing. They need to really be creating meaningful impact. So I tend to be investing in businesses that are really technologically driven, which is we're going to explain why we talk about Palantir as well.
Yep.
They're really disruptors. Really, the product and service tend to have a potential to really disrupt existing technology, and in so creating this meaningful impact that I say, and really making the world a beautiful place. We tend to avoid
Got
the
it.
bad, really refrain from investing in companies that harm our environment and society in the long term. So
Okay.
I tend not to invest in gambling stocks, energy
Okay.
stocks, and stuff, right? I think that's really, or I tend to not even invest in a pure play companies that say, for example, that feed on addiction or seek to harm others. I think I
Right.
ultimately, I want to be owning the best kind of businesses that are really just changing and shaping the world for the better.
Okay, cool. So if I can quickly summarize that, one of it has to be founder led, right? Because the reason here is for drive, for push, for intrinsic motivation, more than just about the money. Then you talked a lot about monopolies in the sense where they have the grasp of the total addressable market and really willing to scale and the ability to scale quickly, which is why you also look at technology companies, stuff with not so much in terms of scaling, in terms of overheads, right? And last but not least, I think one of the things you mentioned was the ability, just like you mentioned with yourself, how you try not to have unlimited downside. You don't want the company as well to have unlimited downside. So the debt has to be manageable. Profitability needs to be there. It needs to be cash ready in the sense where if something were to go wrong, they have this pool of cash to go in for it. So FCF is probably a very good play for you as well. Those are companies that you look at.
Absolutely.
Awesome. Cool. So take us through Palantir, right? Why? So after all this, you've chosen Palantir. As a quick overview, maybe tell us a little bit about Palantir. What does Palantir do for our listeners out there?
Sure. I think let me try to give a story of how did Palantir, the name come from, right? Palantir was actually a story from the Lord of the Rings. It came when Peter Thiel was actually watching the Lord of the Rings or reading the fantasy novels, as we know, by Tolkien. Palantir is actually one of the several indestructible crystal balls that used to be communicate with other Palantir wielders in the Lord of the Rings. And basically they could see the future, the present, or the past. And a major theme of Palantir was that they actually show these real objects or events, and those using these Palantir stones, right, they had to possess great strength of will and of mind to direct the stone's gaze to its full capability. Now, I want to go back to what Palantir is right now, and I want to phrase the problem which Palantir is trying to solve. So the problem that we really have is that a lot of companies spend lots of money, billions of dollars, and a lot of time to try to create their own custom software from scratch. Most of the time, try to create and to monitor data and try to make sense of this data and to get some insights. But the very problematic thing is that most of them are unable to deliver, and all of this data is not up to standard. Most of them, what we have in the market are generally, I would say, mixed match solutions. They're not customized solutions to be able to allow them to aggregate data across various silos and to create these actionable insights. So I think this is really what Palantir came about. Palantir came about when after Peter Thiel and after its PayPal days, they decided when they were trying to solve the PayPal issue of fraud. So they were trying to come up with a solution to try to solve it, and then they realized, when they kept using an AI way to track it, they realized that the threats kept evading it. Then after I realized they needed a combination of what we say a human AI, a human plus an AI approach, and that's why Palantir also came about.
Got it.
And at first, I would say when I first looked at Palantir when the IPO prospectus, I wasn't really too excited because I think at that time a lot of their narrative was around Palantir supporting the US military. And for me, as I've shared just now, vision investing really is if we're supporting the US military and somehow we're killing lives, that's something that's kind of antithesis to what I do. But what happens was that almost just about 2 years ago, about 1+ year ago, I started reading Peter Thiel's book 0 to 1, and I think that really caught my eye from this aspect. And specifically, his book, right? He actually shared a couple of items, and I think one of the items that was really shared was this. So I want to run through this in this specific term. So he actually said this. When we founded Palantir, it was a software company that helps people to extract insight from divergent sources of information. And one thing about Palantir was also because it was so complex and the revenues were so high, they actually work best when they have no salesmen at all. Palantir doesn't employ anyone at that time tasked with selling its product. Instead, Alex Karp, which was its CEO, actually spends 25 days a month on the road, meeting with clients and potential clients, and their deal sizes were between 1 million to 100 million, right? So at that point of time, at that price point, buyers want to talk to the CEO, not the VP of sales. That got me really thinking, okay, now they're trying to solve a really tough problem, and it's a problem that apparently is so big that people are willing to pay lots of money for, and they want to talk to the CEO. So that really got me thinking, am I, looking at that at this story incorrectly, right? So when I was relooking the Palantir's annual report, these three things really caught my eye, or these four things really caught my eye. I think the first one is Palantir's customer acquisition strategy. They really target large scale, hard to execute opportunities at large government and commercial institutions. Now, I just want to think about it. Large scale, hard to execute opportunities. Which company out there actually focuses on this, right? And the second one, the high installation costs, the high failure rates, complexity of data environments, and the long sales cycles actually raises the barrier of entry for competition, which is actually beneficial for Palantir, which is just insane of how I'm thinking about it. And the way Palantir is saying this, right, the third point, the larger and more complex, the more technological demanding the problem, the more likely Palantir is to succeed. In all my years of reading annual reports, I've never seen a company write anything even remotely close to this. Like the more complex the problem, the larger it is.
So,
The more I am to succeed.
So in other words, the harder the problem, the better we are. That's effectively what Palantir is trying to say.
Exactly.
The other question I have is, you mentioned data, right? And I presume this data is related to all the back end stuff and all I think Palantir was invested, CIA invested in Palantir, if I'm not mistaken, as well. Or I think the US government as well. So this sort of data that they're collecting is about personal information, is about sometimes confidential information that they're giving to the government for analysis and so on and so forth. Now, given the inelastic demand for the customers that need this sort of information, you also don't have a lot of people that want this sort of information, right? So your clientele is not very high as compared to, of course, the SaaS companies and so on and so forth. So how do you see this playing out for Palantir? Is that a good thing? Is that a bad thing?
I think it comes back to what kind of data analytics does Palantir do. So Palantir is really not in the business of collecting, mining, or selling data like any of the other guys. But they're really integrating the data that the customer already has and analyzing it for them. So it's really, if I think about it, it's really just taking the data, the customer still owns the data, Palantir basically processes the data. So with the data that the customer basically has, what Palantir does is they construct this real world from these countless data points and allow them to kind of project where it could be, where are the solutions it could be, and more importantly, it actually allows the customer to really monitor and control access to this data, whenever they want to use it. So I think that's really a very key differentiating point. It's not like some of the Facebooks or the Googles, right? When they're actually aggregating the data, they're actually collecting this data and owning this data. And when you're owning this data, you have all kinds of data privacy laws and can have all these problems that come along with it. But actually, Palantir does not own any of the single data. The customer still owns the data, but Palantir just merely basically processes the data and basically provides these actionable insights for them.
Got it. Okay, cool. So then effectively it's a processing plant, right? You filter all the raw materials here, come out really nicely for you in charts. So then your C-suite is able to action it.
Absolutely.
Okay, cool. So take us through some of the products that they have.
Yeah, I think Palantir basically has three main platforms. So they started with Gotham, then moved on to Foundry, and then moved on to Apollo. Let me try to run through kind of what is basically each one of them. So Gotham is really the first one, where they started with data analytics and insight. It was mainly started to provide intelligence to the US government. I think what it wants to do is to really identify deep hidden patterns within these data sets. Because sometimes when we look at data, right, we can get so just lost in the data, and it's just so important. And I think what they're trying to do is really try to make sense of all these varying data points and just try to find all these deep insights. And I think more importantly, it also helps to facilitate these deep insights from the analysts who are looking at the data to the actual guys on the ground who are actually then basically actioning upon this data. So it's primarily used across governments and also on the commercial side, also in the financial industry, especially with fraud investigations. So I think that's really Gotham. Foundry, which is the second one. Foundry is actually a central operating system, or OS, for this data. What I want to do is basically it brings and integrates and analyzes all this data they need all in exactly one place. I think the way about Foundry does is that if a user, they want to experiment or test new ideas, this is what actually Foundry allows them to test and say, okay, based on this data, if we try to change this and experience this, what can we do and what can we achieve? So the way some of the guys are actually now thinking about how Foundry is, and this is a very nice analogy. They say Foundry is to app developers this decade what AWS was to them last decade. So a lot of the Foundry customers now are actually majority of them, or all of the commercial customers actually use Foundry, and some government customers still do. So I think Foundry is really the big push for Palantir.
Got it.
Apollo
Do you know some of the clients that are using Foundry right now? So
Yeah, so I think Foundry, one of the biggest ones you can see is Airbus. So literally, the Airbus built their entire OS literally on Foundry, and
this is for making planes.
for making planes and for flight management.
Oh, okay.
Yeah,
Cool.
so that was I was like when I read it about Airbus, I was like, oh wow, this is like really really cool.
Nice.
Yeah.
Okay,
So
cool. So that's the big
Airbus
push
was using
for.
Skywise.
Yeah.
Just to share a bit more. So Airbus actually uses what we call Skywise. It connects 9,000 aircraft across 100 airlines. So if you think about it, the more industry OS, like kind of Palantir basically builds for all of them, the stronger Palantir becomes, because when you build such a very strong OS for the airlines, right? In this case for Airbus, I can tell you that we are going to be using this for a very, very long time, because planes are still going to be along. Right? So as a result, you have high switching costs, very high
Yeah.
durability, very high recurring revenues, just to give you one sense of how one single solution is.
Got it. Okay, cool. So Foundry would then be, I mean, we're going to talk about Apollo in a second, but which is I think the third product line. But Foundry would then be the big push in order to scale away from, say, the government agencies and so on and so forth. That you
Correct,
feel.
exactly,
Okay.
and that's what we really have, is really integrating the customer's data and bringing the insights and using Gotham to bring along with it.
Got it. Cool. Yeah, tell us a bit about Apollo.
Apollo is really a single control layer for delivery updates. So let me try to put that into phrase, right?
Yeah.
I think
English, please.
it's just basically one point where wherever I can deliver in terms of all the results and where all the customer really wants to access. That's really what Apollo does. So it can be on cloud, meaning if I'm based anywhere. It can be on-prem, meaning that I'm in the office. I can also be allowing someone to be actually using it. And where Apollo really is right now is that majority of all of their commercial customers actually use Apollo. So you can start to realize, right? Gotham, mostly government, some financial services on the fraud side, Foundry, all commercials definitely use it. And Apollo, same way as all commercial customers are using it, because a lot of the commercial customers, as we have been shifting from on-prem or on-premise, in the olden days where we actually own, a lot of the guys own their own data centers,
Service.
they own
Yeah.
own their own servers, and they started shifting more to the cloud, right? So I think
Yeah.
there has been now a hybrid of from on-prem to a kind of hybrid on-prem and also with the cloud, and also more towards the cloud, right? And that's why I think that's where Apollo decided, it's also important, because I can't be just sitting in the office and using Foundry. And sometimes I might be, off the ground, away from the office, on site, on a certain venue. I need to be using that, and I think that's why Apollo really helps to bring the whole entire system, basically, end to end.
Got it. And I mean, the question that coming back to as well is, it's a high cost to get started, right? There's a lot of initial cost that a company and big companies will need to go in in order to use any of these product lines. So, and a lot of companies won't be able to afford that. So how would you see Palantir scaling in this regard, right? So you've got Airbus, which is a massive, massive company. Of course, you've got the US government. You've probably got other governments involved as well, not just the US. But these are big ticket items. These are the companies that can afford it. What about the bigger companies, but not so big that they think $1 million a pop is too much?
No, Rakesh, I think you asked a really great question. I think if you think about how most companies tend to scale, they either do it two approach, right? They either go for the very big customers first, and then the very big enterprise customers, and then after they start scaling down to the mid section and scale down to the SMB section, right? Or you can also then start from the SMB section, the small medium enterprise businesses, and then scale up, right? I think where Palantir does is the first one that I mentioned, basically. So it started on the very big customers, right? Where the ARPUs, or what we call the average revenue per user, is extremely large, which I'm sure we'll go through later. But I think they started from that very large end, and I think they're trying to expand this. So
Okay.
if you think about it, Palantir, because the end-to-end solution is so robust and so good, a lot of this has really been solving very big problems, and that's what Palantir is, right? And of course, the world has an unlimited amount of big problems that we need to solve. But I
Absolutely.
think there's some ones that are they are more valuable than others. Just to give you one context, right? In UK, during the whole COVID time, they actually tried to bring up a test and trace, and that for the test and trace program which they tried to did, right, they actually spent 155 million pounds just in 2020 to
wow.
2021 alone, right? And they struggled to provide or to produce the desired outcome. What happens is that they actually started using Foundry, and the 2-year license itself only cost 25 million. And they actually managed to deliver the result, right? So just to think about it. You can be spending so much more money, but if you don't, give that desired outcome, and it's already about thinking right rather than just trying to do it yourself. Someone can actually do it much better. So the way to think about it is they try to do the big solutions. They're attacking these very, very big problems, and that's why now they started to scale back, to the mid sections. They're also providing basically Foundry for startups as well. They're going down Foundries for the smaller, even for the startups and smaller sections, right? They're trying to make it more popular, and I think we will share a bit more about how they have done it via the modular. Because right now you have kind of like a full solution, but when they do it, try a modular approach, because ultimately people cannot pay. So you give them modular, right? And then they slowly upsell. They try this, oh, it's great. Then they buy something, they get an extra one, right? Or maybe they first start off with, they first start off with Gotham first, or they find, oh, okay, it's great. It provides data analytics, but I need to then now let's now try to aggregate our data. So let's upsell, right? And let's
Got
move
it.
forward. And then after that, okay, now guys, okay, let's roll out across the entire firm. Let's add Apollo. So I think that's how they try to do that. The unfortunate bit is, I guess, most businesses don't wish to pay an upfront
exactly.
value upfront, because until you provide certain value, right? I think this, unfortunately, it's just how we humans operate, and that's how they are starting to kind of redesign Foundry even to do it via this modular approach.
Got it. Okay, cool. So then, just as a quick recap here, they started off, of course, as a big enterprise sales, right? But I believe it was US government. I think they were the ones that helped locate Osama as well, right? 2011 was it?
Yes,
Palantir.
apparently so. Yes.
Yeah, cool. I was reading that before, actually. That's pretty interesting, right? So then I guess they found their clientele, and that gained a lot of trust in that region. Now they're looking to scale that, really improve that, and scale downwards towards the big mass of companies that they could be targeting. So take us through a little bit about the numbers, right? So I think our listeners here want to know a bit about the numbers in terms of cash, in terms of FCF, in terms of ARPU, what you're looking at. And of course, you talked a lot about retention. So why don't we go through that as well?
Sure. Let's run through a bit of their financials, right? So I think if you look at their full year 21 revenues, it was about 1.5 billion, and they end up growing at about 41%. I think if you look at their cash flow margins, their operating cash flow, what we call OCF margins, were 22%, and they were improving.
So this is 21 to Q4 21.
No, this is full year 21.
Full year 21. Okay.
Full year 21. Sorry. So the OCF margins were 22%. The free cash flow, or what we call FCF margins, were 28%. There are very few companies with north of 25% free cash flow margins.
Yeah.
Even very few SaaS companies, right?
Okay.
So if you think about it, Palantir almost operates with a rule of almost 80, which is a very good balance between I would say fairly moderately high growth, 40+%, high cash flow growth as well, which was also growing still about there.
Got it.
That said, I would categorize Palantir as not being a very fast grower. It's not a company that's going to grow, like weeds, right? It's probably not going to grow like north of 60, 70, 80%. But it can be a very durable grower of greater than 30% plus. And that's why even management is able to provide more than like a 5-year forecast and says, we think that Palantir can grow at greater than 30% growth rates for a very long time.
Got it. And that's interesting, right? That, full year 21 saw FCF increase, saw cash increase. I think I was looking at the financials as well, where, previously they were burning through piles of cash, right? 2019, 2020. What sort of changed?
I think it was really, if you think about it, right, it's ultimately a SaaS company. And in a SaaS company, you would have fixed cost leverage. And when you have customers that come in, what we call contribution margins, right? When they start coming in, basically the revenues will basically far outweigh the fixed costs, and operating leverage will really kick in, and that's where profitability really jumps through the roof. And I think that's what they have been trying to. I think the really thing about Palantir is that because it as a business itself, it has such a long-term life. Just to share some idea, right?
Yeah.
The weighted average duration of Palantir's contracts are 3.5 years. Majority of most contracts actually start for 5 years. It's just that the only difference is that the US federal government cannot actually exceed 1 year. So if you think about it, if the US government can do long-term contracts, the duration of
Sure.
their contracts are superbly long, right? And you look at all SaaS companies, there are very few SaaS companies that actually have contracts of north of 2 years. The only ones are probably the cloud titans, right? Your AWS, your Azure, and those, right? Other than that, the most I've seen is 2 years. And for someone to be solving a really tough problem and do 5-year contracts and have
Yes.
customers sign that, it is very unique. And I think that brings extra eyeballs and see, right?
Got
And
it.
and I think that's really where the case. And you can see it's just such an extremely I would say predictable and very recurring company that's really trying to solve the hardest problems. And I think that's one way to really think about it. And their net dollar retention was, I mean, it's not like superbly high above 150%, but if you think about it, the net dollar retention is 131%, which means
131, sorry. What was it?
131, right? 131.
That's good.
So if they don't acquire new customers, revenues are still going to grow at 30+% CAGR.
Yeah.
So if I think about it, I think the minimum revenue growth of 30%, I think it's okay. So as long as they keep adding customers, they should be able to grow between 30 to 40+%, at least for the next couple of years. And I think that gives me
Okay.
the weighted duration of the contracts gives me so much more comfort. And if you
Got
think
it.
about it, their deal value is actually 3.8 billion, which also has rose around 35%, which means you see, the full
Sorry,
year
so
21,
each deal is at 3.8 billion. Sorry,
the
what do you
remaining
mean?
deal value. So meaning, for example, now they're preparing all their contract. Every year they recognize revenues, right? So the remaining deal revenue that is pending to be recognized as revenues is 3.8 billion.
Oh, wow. Okay.
Yeah. So you think about it, 3.8 billion versus 1.5 billion. You know that they have revenues for the next 2 years. Don't have to worry.
Yeah. Got it. Okay, cool. I mean, one of the things out there, and when my coconuts out there that have been commenting on us asking for Palantir is very much why they're burning through the cash, right? Because what is management doing? They had, I think, a massive increase of cash in 2019, cash burn, and their revenue didn't grow that much. The way that you've put it, and correct me if I'm wrong, is that they were investing in the product, right? They were building Foundry, they were building Apollo, they were building Gotham. And now that they're at a level that they're ready, we saw in full year 2021 that FCF actually was growing, right? Because they didn't need to inject that cash into the product to grow that. Is that about right?
Yeah, I think you're absolutely right. And in addition, right, they were also expanding their sales force quite a fair bit as well. And
Okay, so they've
expanding
started
their
a sales force.
Yeah, correct. So I think
Okay,
that's
that's always
also,
good.
they want to make it more scalable, and as a result, the comp has also gone up. And in terms of the stock-based comp and everything has also gone up, and also that has sucked up a bit of cash. But of course, stock-based comp is not really cash, but where I think more that sales force expansion took a bit of time, and you have to ramp up your certain fixed costs, right, by hiring salespeople before
Absolutely.
the revenues actually come in. So I think this was kind of like that 1 or 2 year, I'll say the valley where your costs are still rising and your revenues have not come in because the sales have not actually kicked in with the extra deals that come in.
Okay, got you. Okay, cool. This helps. Now, I want to talk a little bit about TAM and what's next for Palantir before we end off the episode. But how's their debt looking? You talked a lot about debt in terms of interest rates rising, all of that this year. So take us through that.
Yeah, I think if I look at it, Palantir is one of the strongest balance sheets, right? They have cash of 2.3 billion. They have zero debt, and they have a 200 million unutilized lending facility. So I just look at basically, whether the cash versus debt. So lots of cash, zero debt, free cash flow positive, very durable revenues. I think it provides a very strong fortress balance sheet.
Got it. Zero debt. Okay, so they don't have a mortgage now, but they do have a 200 million lending facility. So if they want to move into a debt ratio, they can.
Yes, they can.
Got it. Okay, cool. So you mentioned, right, moving to TAM now, right? We've got the big companies which are high in value, right? You mentioned 3.5 years on average, but actually most of their contracts are 5 years. And now they're trying to go down and hit the commercial companies, right? Not the Airbuses, but the smaller ones. So what's the TAM here? What's the projection in terms of revenue and all of that for each? I think we don't need to go through each of the products, but as a combined, what do you think it is for the next 3 to 5 years?
I think Palantir basically estimates the TAM to be north of 100 billion. So I just think about, just to give you some perspective, their revenues are around 1.5 billion. I mean, I don't think obviously Palantir can hit 100 billion in terms of revenues, but I think it's probably going to move directionally towards that because they're already solving such a big problem.
Okay, so that's their TAM. And what competition? Now, the other one is, they mentioned the harder the problem, the better it is for them. So what's the competition like? Who are they?
Yeah, I think you brought this is so succinct because in terms of competition, I think that Palantir is really the top dog and the only dog in the field so far. I don't think that
Okay.
it's really one competitor that's doing exactly what they're doing. I would say if I had to name one, the closest would probably be IBM Watson, but that is purely something that is automated, right? So I think that's quite different. And what they're trying to fundamentally compete or is really customers trying to develop their own software. And it's not
Okay.
really competing against other competitors. So I think that's really just that biggest competitor. And as long they can manage to convince customers that use ours, don't build yours. And I think that's their biggest win.
Got it. Okay, cool. So I get what you mean. I'm looking at like sort of MuleSoft, but it doesn't really look like a competitor actually.
No, no.
Yeah,
Yeah.
exactly. I'm just
And
going.
even if I think about it, like there are some other companies, right? Like your Snowflakes, your AWS, Azure,
Yeah.
Google, IBM. They all offer very similar thing, but they're just moving like data from data warehouses. But actually, Palantir can actually interact with all of them. So I think that's very very different. So Palantir actually managed to kind of integrate with some of these as well.
Got it. And Palantir, take us through this, right? So
Mm.
if you look at all, your Azure, so all the other data platforms out there, I mean,
Mm.
you're looking at the commercial companies comparing,
Mm.
right? Any data platform is effectively an indirect competitor of Palantir.
Yeah.
And you mentioned that they actually integrate most of these data platforms. Now, what is the competitive advantage that Palantir gives over any of these data platforms? Is it prediction? What would it be?
I think the first thing is when I mentioned just now, it's really about the data security and privacy because the customers still own the data. It's not housed, in the cloud. There's that platform capability and the functionality really just being able to just provide all of that at a much lower cost versus what they have done to provide. I think
Okay.
the ease and the speed of adoption and use, I've seen some of them, the moment they integrate the data, the insights, I saw some of the tests, it is really quite remarkable. So I think that's really just that ease of use.
Okay. Ease of use is a fair point. It's not easy to use a data platform. So,
Yeah.
absolutely. I think the other big one that we can look at as well is utilization rate of the companies and of the different employees in there as well. All right. So, I mean, we've talked all about the good things of Palantir, right? Where they've come from, what they're looking at, what's next for them as they're looking to scale into the bigger, larger segment of the companies and private companies. But what are the risks that you see could be a downside for Palantir?
I think some of the risks that I primarily see around forests. The first one is the durability of the revenue growth, right? We think that Palantir's in terms of the contract length is fairly long. The question is, as Palantir basically moves down, from the large enterprises to the smaller ones, how long are these sales contracts going to be? It's probably going to pull, if not lower, the contract length. The
Yeah.
question is, would it bring the durability lower? But could be, increasing the entire revenue wallet, right? I think that balance. So I think it's really about Palantir managing that balance
Got it.
and bringing it right across. But you must understand, every deal takes between 12 to 18 months to bring to fruition. So that it takes a while. So an investor really in Palantir has to be really patient and once the business kicks in, right, you're just going to get revenues for a very very long time. But you just got to be very very patient and let the whole thing come in. So I think that's one way to be thinking about. The other one is also the ability to retain and to grow employees. Palantir's Glassdoor ratings, I would say on the CEO ratings, is not particularly high, about 80+%. But one thing
Okay.
about on the employee standpoint is that they are really young. They work very very long hours, but they're extremely loyal, and their alumni is really really strong. The Palantir alumni, those guys will really say they really love what they do as a business. It's almost Tesla like because from that perspective, and I think that's really one. Of course, if they lose key employees, employees are not able to deliver what it is. The revenue, the sales, the support, that could be a bigger problem. The third one that I have really is about the reputation risk in terms of the businesses that Palantir might support. Palantir has also stated that we will support US and its allies, and they also stated that we will not support China.
Oh, I see.
And I think staying on that front, it's extremely key. That's at least on the government side, right? I think that's key, right? I think to a lesser extent, I would say the high stock-based compensation. To be honest, in the last couple of years or I was actually very greatly concerned in terms of the high stock-based compensation for Palantir because that has actually caused profitability for Palantir to be burning cash or what we call earnings in quite a fair bit because of the high stock-based compensation. Obviously, those are non-cash. But I think that dilution can greatly destroy value. And I was looking at prior, and it was destroying a lot of value in a sense because they were basically diluting far more than the amount of shareholder value that they were creating. And I think that if you can think about it, probably the best thing is we have probably endured most of it. And going at this entry where the majority of that compensation has been paid is going to be quite good. And if you think about it, the latest earnings call they actually stated that the stock-based comp will not grow basically at no more than 5%. And if you think about it, actually the current stock-based options that they have is just at most 2%. So they have actually started issuing a lot lesser stock-based compensation as well in terms of stock options. So I think I can see that going significantly a lot lower. So I will see stock-based margins based on revenues should come off. I will see non-GAAP profitability continue to increase, but GAAP profitability also start to trail and start to improve, especially in the next 12 to 18 months or so. That's it. Yeah. So I think that should help quite a fair bit from this front.
Got it. Cool. Awesome. So what is the key takeaway, right? So as we end off this segment here on Palantir, what's the key takeaway for all our listeners out there that maybe TLDR?
Yeah. I think if you think about it, Palantir is really it's an extremely durable company, really trying to provide actionable data insights that a large part of the world can't do it because we are now awash in this environment of data. And I think that is extremely key. This is really about building software that's really helping the world solve problems that matter and making the world safer and better. And that's why kind of it also deserves a space in the portfolio. And it itself as a business, it's extremely durable, right? I think it should be able to grow north of 30% revenues top line, and it's I would say free cash flow extremely positive. That gives us a lot run by very good founders, very good management. And solving very big problems that are very hard for anyone else to solve. So I think as itself, generally on our side, we tend to like to focus on enduring companies, and I think that Palantir is one such very enduring company that I think will continue to grow for a fairly long time. That I guess at the current values would probably prove to be a deep screaming buy, in the coming years and decades ahead.
Got it. Awesome. Thanks, Eugene. So last question, right, for our coconuts out here. Now, my question to you is for yourself, right, for your, vision fund, or even for you personally, where would you put this in your portfolio, right? Is this the slow play? Is this the big chunk, right, for your safekeeping, I guess, if you will?
Yeah. I think the way I think about it, Palantir, it's not exactly like say the highest risk, but actually for me, it's actually I would say a high level conviction, and I actually just started a starter position, and I'm looking to build it to a much larger position because I think that the market is underpricing or not being able to understand what Palantir does, and really appreciate the durability of the business and of the franchise. I think they're very focused on this previous the burning cash. They also focus on the types of customers and businesses that they serve, and they're not trying to really understand what they're trying to do. I think they are also underestimating possibly what Foundry, when they're going to expand out to more customers on that. I think they're greatly underestimating that front, and I think that's where it can be duly rewarding from that perspective.
Got it. Cool. Awesome. Thanks for that, Eugene. Coconuts out there, hope you learned a thing or two with Palantir. Thanks for the recommendation. As usual, please go ahead, let us know, slide into our DMs. Let us know if any other stocks you would like us to do, and we'll go find the relevant expert to get that to you as well. Thanks again. And of course, thanks, Eugene, for coming on board and having this time with me.
Thank you so much, Rakesh, for having me.
All right. Bye.
Bye.
Hey, Coconuts. So I hoped you learned something useful today. Definitely recognize that investing is a personal decision. We are not giving you recommendations here, but are always happy to geek out with you about different interesting companies and trends for the future. This series definitely has a lot more depth and terms, and we want you to tell us what stock to analyze. So if you have any feedback or ideas, do drop us a line through our socials or email us at hello@thefinancialcoconut.com. See you in our next episode.